Good evening, ladies and gentlemen. John Kelly for Options University on Friday, October 14th, 2011. A disclaimer, trading always has been, always will be risky. That's why you're here at Options University to learn that competitive edge, give you that little bit of edge to ensure a profitable future. And it has been a very profitable future if you've been long in the market. The NASDAQ has had its best rise since March of 2009. The economic news that's propelling this, Walmart announced first time in 2 years, 3 straight months of sales increase of their stores here in the United States. Retail sales on Friday were up 1.1%, biggest gain since February, and business inventories are up 0.5%, 20th month in a row. Businesses are confident that the people will be spending. Is there a fly in the ointment? The fly in the ointment is the volume. Where's the volume? Back to the NASDAQ chart here. This is a phenomenal rise. We have beat the 50-day moving average and climbed above the 200-day moving average in about 7 to 9 days. But when you go and look at the volume, and here's the volume that pulled it down. This was the institutions dumping the stocks and pulling out of the stock market. And lackluster performance, another exit, and then finally a turnaround followed by decreasing volume. This is the fly in the ointment. This is what you've got to be alert for. This rise has been phenomenal, and if you've been long, it's been great. But your stop loss has to be tight now. Economic news continuing on the downside that the market's ignoring. Consumer prices jumped 0.3%, the largest jump in 5 months. Import prices were up 14% versus a year ago. This is the printing of the U.S. dollar, and our buying power overseas is decreasing. We're becoming less and less competitive. Consumer sentiment, the Michigan sentiment numbers were down 57 from 59 a month ago. Business sales, although business inventories were up, business sales were only up 0.3%, very weak. And the ECRI indicates the recession is coming. The ECRI is the Economic Cycle Research Institute. They have not been wrong in calling a recession since 1968. And these numbers do not bode well. It doesn't say when the recession is coming. It just says the recession is coming, a double dip. World Bank news. The S&P downgraded Spain to a AA with a negative outlook. Fitch came in and announced a possible downgrade of Goldman Sachs, Morgan Stanley, Bank of America, British Barclay, French Paribas, and Societe Generale, Swiss Credit Suisse, and German Deutsche Banks. So the concern over Greek debt, Italian debt, and Spanish debt continues. Most of these banks have done a 60% write-down on their exposure to the Greek debt. Many analysts are suggesting this haircut's going to be more like 60%. The G20 summit in Europe and the European Union summit meeting will get underway to discuss just this. They've been trying to bolster the bottom line of the European banks and other banks exposed to Greek debt. Slovakia came in and was the final country to ratify the increase of the Economic Financial Security Fund, so they'd have the funds to back this up. China's inflation numbers came in, and inflation is easing. That was the good news. The bad news was that the copper inventory, which they thought they had 1.9 million ounces in reserve, we thought they had 1.2 million in reserve. They have 1.9 million in reserve. So if we continue on with the numbers, the E-mini has been in this trading range from about 12.20, 25 to 12.30. The bottom of the range, we made that low of 10.68, and we have zoomed ever since. Now we are just starting to break this to the top side, and we'll see why we got this boost on Friday and why we probably get another boost Monday and Tuesday from this. But again, look at the volume. This was the institutions getting out of the market. and they stayed out of the market, and they continued to boost their way out of the market. Saw a small turnaround here when we started to reverse, but the institutions have not participated in this rise. This is a bull run in a bear market that could collapse at any time, and we're at top of a range. The VIX, however, which almost got back up to the top of its range, channel that it's been in at 48, reversed, came down here and tested the bottom of this thing on Wednesday. Thursday, came back and tested again, and then yesterday we broke through it. This is significant. If this range continues down to 25 to 20, then it would bode well for the market rise to continue. In stock news, Apple. Apple's earnings are after the close on Monday. This is why I say we continue to see possibly an increase in the market for now. They had record iPhone sales. Those phones were started, they were available for delivery and pickup starting today. Upgrade to a buy at the ISI group, and they're in talks with Hollywood to offer videos in competition with Amazon and with Netflix and with Blockbuster. So the competition heats up. IBM was increased to an outperform by Macquarie. They have a new record high. We're going to look at that in the gold member section. And earnings Monday or Tuesday. Green Mountain Coffee Roaster, after not being listed in the S&P, and subsequent stock retreat in price that it took, received a buy rating from Longbow. The Teva-Cephalon merger was approved over in Europe. Hans, the Monster Energy drink, announced a $250 million stock buyback, and Rax garnered a buy rating from Goldman Sachs. Earnings. Here's what boosted the market Thursday and Friday. Google, the Google beat. The nice rise into earnings, which is typical of Google, and then the earnings beat. This is a linear regression channel. Notice the slope of the linear regression channel is downward. This beat took it right up to the top of the linear regression channel. Now, the channel is not concrete, it's rubber. And if this thing continues to beat up against it, it will turn this downslope into a flat to an upward beat. But notice, and I put this on here for a purpose, this is the last earnings for Google, and they had a huge beat, a tremendous beat, and it took Google up over a period of about a week after the earnings. And then take note of what happened to the price of Google after that over the next couple of months until we got into this earnings period. So a good beat by Google. I opened up credit spread Iron Condor on it Friday, as there was still a lot of implied volatility floating around, and by the end of the day had a small profit. But I was able to get 80 points away from this stock price on either side to open up my credit spread for November. And notice how the volume poured into this stock. Institutionals coming back in. I'll take the free ride. On the reverse side, JP Morgan on Thursday, before the open, had a beat, and the stock ended up retreating for the day in institutions dumping the stock, and faced a doji today. So a lot of bank stocks have earnings next week. Remember, they're under a lot of pressure right now from government lawsuits, government investigations, and suspicions as to their exposure in the European situation. In other earnings, J.B. Hunt matched on earnings, announced a stock buyback of 4 million shares. Mattel matched on earnings, announced a stock buyback of 500 million shares. So what you're seeing here is a pattern. Jobless came in at 404,000. They expected 406,000. Still over that number. Employers, institutions, companies are not hiring. They're beating. They have a lot of money on board. They're merging, or they're buying their stock back, or they're increasing their dividends. They are not hiring new employees, and we're stalled. Are we going into a double-dip recession? Some of the earnings, such as Google, were really amazing, doing an extremely good job of managing their business. So how do you trade this? That's what we're going to look at in the gold member section next.